What is going on with CoW protocol? Why is the price suddenly rallying? Who is buying here? Who's selling here? Is this a pump and dump, or is there actual long-term adoption happening? In this video, we are going to look at on-chain metrics. In this video, we are going to look at the data most people are not considering to try to figure out, is it still sensible to buy CoW at the current levels? Now we're currently at 96 cents. We are up 46% today, 97% this week, and almost 300% this year. But things haven't always been rosy. Initially, the price dumped, and here's why. So have a look at this all-time chart. We first went from 80 cents all the way down to 5 cents. And the reason for this, as so often happens with DeFi projects, is tokenomics. It's how much the supply increases over time. If the demand doesn't grow as quickly as the supply, then of course the price goes down. And so in February of 2022, we had only 85 million CoW tokens. Now we've got 377 million CoW tokens. So the supply grew by 4.4x. This explains that the price goes down by 80–90%. Now this is a linear unlock schedule. What that means is that over time, proportionally, the inflation is actually going down. We are still going to see supply growth, but it's only in the realm of 20–25% per annum. It's not anymore multiple X's in a few months. Now, the CoW token is not just traded on-chain. The price discovery actually happens on Binance. 10% of trading volume happens here. And on top of the spot volume, there's also perpetual futures. There was $1.7 billion worth of CoW tokens swapped in the last 24 hours alone. Perpetual futures are derivatives, right? They're not directly spot buying, they're simply bets on the price. But when there are enough bets on the price, then of course the centralized exchanges have to hedge themselves as well. And that hedging happens on the spot market. Now let's have a look at the long-term usage statistics, because they're actually very positive. What we've got on the left is the number of traders over time, both new and returning. This chart starts in March of 2022, and we can ignore the latest data point because December isn't yet over, but it seems like we had at least a 2.5x, maybe even 3x in terms of the traders over time. And we can also see that at least in the last few months, the proportion of new traders to returning traders tended to improve. In other words, CoW swap is a sticky protocol. It's been used several times. Now, what is CoW swap? CoW swap is a DEX aggregator, so a decentralized exchange aggregator. It takes the best prices and it combines the best prices across different liquidity pools. But on top of that, it's also a dark pool. So it combines orders that have a coincidence of ones. So if you submit your order, so say you want to trade your wrapped Bitcoin versus wrapped Ethereum, and within a short time window, say 10–20 seconds, we see somebody that wants to do the exact opposite trade. Then the trade doesn't have to hit all of those different liquidity pools. It can be made directly on CoW swap, and that saves fees. So especially for very liquid trading pairs, CoW swap is very, very useful, and it saves a lot of gas fees, it saves a lot of slippage. And that's what explains why the trading volume of CoW swap over time tends to rise. Again, the latest data point here is not representative. We are likely going to see a new all-time high here. So far, only half of December has passed. It's not just the trading volume that's going up over time, so measured in US dollars, it's also the number of trades that's going up. So this looks like very nice organic growth. This is exactly what we want to see for a decentralized finance protocol. There are, of course, different DEX aggregators, 1inch being the largest, but CoW swap is gaining, relatively speaking, as well. So it's not just the overall crypto market that we see more activity across the board, it's also CoW protocol gaining more market share. Now let's dive into the blockchain analytics. Let's see who's buying and selling here. Let's have a look at the number of retail investors and the number of whale investors over time. Now, the way we make the distinction between small retail and the large whales is by minimum holding thresholds. So to be counted in the chart on the left, a wallet has to have at least 1,000 tokens. Since currently a token is worth roughly $1, that's also $1,000. In the middle, it's at least 10,000 tokens, and on the right, it's at least 100,000 tokens. We can see pretty clear accumulation across the board, and especially the whales, they tend to be buying the most recently. They tend to go up in numbers. We can also see how the number of new wallets that interact with the token, especially in the last month, is going up. Again, we have to ignore the latest data point because today isn't yet over. We might see another all-time high. And of course, attention comes in waves. Whenever there are more buyers and sellers hitting the market, we also tend to have higher prices. Currently, we are not at low attention, so we might have temporarily somewhat inflated prices, but again, the long term looks bullish. There is adoption. There is a lot of leverage in the market through perpetual futures, but long term, the usage of the protocol is definitely growing, and it's growing faster than the industry average. Now, the macro picture very much looks like we are at a pivotal moment. It seems like we are very close to an altcoin rotation because the risk to reward for Bitcoin at this moment is not that great. Have a look at this long-term Bitcoin chart and check out those two red lines. At those points of time, the upside potential for Bitcoin wasn't that great anymore relative to the downside. So this is a very long-term chart, right? We did not yet hit the top, but we are relatively close to the top. Now, those lines are not scientific whatsoever, right? They're simply just curved lines drawn on the Bitcoin chart, but they tend to connect the tops relatively well, and they tend to connect the bottoms relatively well. Currently, we are very close to such a high risk, poor reward situation for Bitcoin one more time. Now again, have a look at those two red lines. Those points in time correspond with those red lines over here. This is the Bitcoin dominance. The Bitcoin dominance crashed when the risk to reward for Bitcoin wasn't that great anymore. What does a Bitcoin dominance crash mean? It means that Bitcoin as a fraction of all of crypto is going down. In other words, it's altcoin season. The altcoins outperform Bitcoin at that point in time. Now, historically, that rotation happened when Bitcoin dominance was at around 70%. This time it seems to happen a bit earlier, but it looks like we have already started the rotation again because the risk to reward is not that great at the moment for Bitcoin. People want to get the multiple X returns, and they're not anymore that easy to be made with Bitcoin. And so what asset class performed the best in the last 7 days? It is the risk on categories. It's things like frog themed tokens or AI memes. And so the largest of the AI meme tokens are things like Fartcoin, which is currently at 44 cents, which had been covered on this channel when it was still at 5 cents. Or it's things like Goceus Maximus, which is currently at 56 cents, and it was at above $1.30 at one point, which was covered on this channel when we were still at 25 cents. Or here, another AI meme, AI16Z, currently at 67 cents. And we talked about this here at 28 cents. Now, how did I discover tokens like this that early when they still make multiple X returns? The answer lies in on-chain analytics and in wallet tracking. I like to track wallets of other insiders, of influencers, of top traders. And so have a look at the recent trade. I published this in the Gerhard Trade channel on December 10th, how I'm buying some Alchemist AI. And since then, the price appreciated by more than 40%. And it is the best performing token on Solana in the last 24 hours. This is not random. This is not luck. This is all happening because of wallet tracking, because we get transactions whenever influencers and top traders are buying. Here, have a look at this recent trade by Crypto Gains. He bought Morph AI, and this is the chart. This is a channel of Crypto Gains. He's got 140,000 subscribers, and he talks about small cap cryptocurrencies regularly. And we are tracking 55 of his wallets. Or have a look at Crypto Banter. They've got 1.1 million subscribers. When they talk about a token, especially a small cap cryptocurrency, of course, this generates a lot of attention. Attention turns into purchases. Purchases turn into rising prices. And so we are tracking 33 of Crypto Banter's wallets. Or check out Alex Becker, 1.5 million subscribers. Through on-chain analytics, we found 12 of his wallets. Those are not official wallets, right? Those are wallets that we find through various means. Now, what kind of means? It's explained over here in this tutorial course. It's 8 videos in total. It's explaining how to find influencer wallets, how to track influencer wallets, and how to then interpret the signals that we get from the tracking. It's all part of the premium membership of this channel. Premium is not just about wallet tracking. It's also about on-chain analytics. It's also about backtesting. It's also about risk mitigation and portfolio diversification. There's more than 100 tutorial videos in total in premium. And so if you want to stop just chasing the trends, if you want to be early, then feel free to check it out. It's currently $165 per month. There's also a 1-week money back guarantee. So in case you don't like premium, in case you don't learn anything, just message me within the first 7 days and I'll refund you 100%. There's really zero risk for you. Now, does it still make sense to buy the CoW token right now? How much more upside potential is there really? Let's have a look at comparable market caps. We all know that currently the market might be somewhat heated. There is leverage in the market. There is a lot of usage of the perpetual futures, but long term, we do see adoption. Now, here's an overview of DeFi protocols. And CoW Swap has currently a market cap of less than 300 million. Now, this is not a lot. Most DeFi protocols have way larger market caps. And a lot of them aren't even used that actively anymore. Now there's the direct competitor 1inch with a market cap of 700 million. And 1inch is much larger than CoW. So this is justified. But then there are also protocols like Compound, DYDX or Synthetics that aren't really growing that much anymore. And they only have a market cap of 1 billion. So that would then justify another 3x for the CoW protocol, so a price of roughly $3. I believe it's rational to be long-term bullish on the CoW protocol and on the CoW token. The token inflation isn't that bad anymore, the tokenomics are sound, the adoption of the protocol is long-term positive, and even though we might be short-term heated and we do have a bit of leverage in the market, CoW protocol is definitely riding this current DeFi wave quite well. If you got some value out of this video, feel free to subscribe. I publish you regularly. A like would be very much appreciated as well. It helps the channel grow. See you in the next video or see you in premium. Cheers!